Now, to our first conversation this afternoon, the governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, and the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale Edun, have declared that Nigeria has exceeded its most turbulent economic period and is now firmly on the path to growth and stability. Speaking on Friday night at the joint press conference at the end of the 2025 International Monetary Fund World Bank Spring meetings, the governor of the central bank asserted that the country's monetary and financial frameworks has matured significantly, with the foreign exchange market now operating effectively based on market fundamentals. Mr. Cardoso emphasized that the central bank's primary duty remains safeguarding stability, not imposing rates arbitrarily. According to him, he says the bank is not the custodian of stability. The role is to ensure that people can plan without suffering the shocks of internal and external disruptions. End quote. He cautioned against lingering cynicism, describing the current economic climate as one ripe with opportunities that Nigerians must seize. Let's start our conversation this week. Investment analyst with Chapel Hill, Denham, Nabila Mohammed, joins me via Zoom to start this conversation. Nabila, good afternoon and thank you for coming on the program this afternoon.
Good afternoon and thank you for having me.
Yeah, I'm sure you heard my introduction and I don't know how that comes to you. My question to you would be that do you agree really that those times are over?
I mean, if we look at the reforms and how they have shaped the entire market since it was started in late 2023 to date, we've seen some level of, yes, we've experienced devaluation, but we've seen some level of stability through at least the first quarter of this year. And if we are to just judge based on that, I would say yes, we are starting to enter the space where we can better plan. Companies can better plan around where they are seeing market conditions, and this can positively impact their businesses and, of course, translate to growth. So, based on basically what the CBN governor disclosed, they have actually put in the effort so far since their regime started. We've seen series of circulars with regards to FX stability or addressing transparency in the market, enabling more participation, just unlocking liquidity as well. So all these reforms really have sort of driven the performance of the FX market. And I must add that engagement with bank management, top banks in the country have also revealed that some of the swaps that they have, the currency swaps that they have with the sovereign are being repaid. So it means that in the coffers of the CBN or in the government, there is adequate liquidity or FX liquidity such that they can even pay back the swaps they have with the banks and even not have to, roll them over. So this just really speaks to the fact that there has been an improvement, and we are seeing other people also comment on that fact. So I believe we're at that stage where the country should, be looking to do other things given the stability we're experiencing and how it will impact businesses going forward and, of course, the overall economy.
Interesting start to our conversation, I must say. But what do you make of that handshake? Many say that we are beginning to see that the positives of that handshake. Of course, you know where I'm headed, between the Central Bank of Nigeria, the Apex Bank, and obviously the Finance and Ministry. That's between the monetary and the fiscal side. Better than what we used to have before now. Is that also what you see or what you think?
Most definitely, that is what I see, because when they started to rein inflation aggressively with all the rate hikes that occurred, at least in the first half of 2024, we had 400, we had 200 basis points increase. We also saw that on the fiscal side, in terms of the instruments that they were issuing and the rates at which they were issuing those instruments at, mirrored the rate that the CBN was trying to communicate via auctions, via the monetary policy decisions. So it just showed that really they were working hand in hand, or they are working hand in hand to address the issues around our inflationary problems. And we know there's so much that the MPC can do. The fiscal side also have to bring their own best foot forward to the table in order to ensure that this is addressed across board. And that's why we even in the engagement with IMF, they did mention things around fiscal discipline, fiscal responsibility, making sure that whatever money that we're able to save from the removal of subsidies are deployed to sectors or areas of the economy that will bring about growth. So in as much as there's tightening on the side of the CBN, there should also be fiscal responsibility that will, support or augment this particular strides that the CBN or the monetary policy authorities have been able to bring about since the time of this present government.
All right, now, Nabila, let's move on with the foreign exchange market, which the governor is also saying that it is now effectively based on market fundamentals. When you say market fundamentals, my question will be in two forms. Would you say that our currency is now appropriately priced? That's number one. And yes, I know I expected that smile. And looking at that fundamental, the market fundamentals, are we on the right track to attract the kind of investment that we need? You're an investment analyst and you know where I'm headed.
The fair value of the currency, from a theoretical standpoint, it is expected that it will be mirrored by our trade export, let me put it that way. And we all know the history around our export and how we are still largely dependent on crude oil. So there is still that diversification that needs to be done. Now, if we're looking at the fair value of the currency, based on our own in-house computation, it should be around 1,000 levels. But that is if we're looking at the fundamentals with regards to our trade, with regards to our inter-trade relations with other countries. But we all know that there are other market participants that will either make or mar this particular fair value that we have arrived at or that we think the currency is supposed to trade at. And these are some of the things that I believe the CBN has, sort of tried to address over the past 18 months. What am I speaking about? I'm talking about the reforms in the BDC segment. I'm talking about the introduction of the NFEM, just allowing for transparency, allowing for participation, allowing for liquidity. So all these are reforms that would cater to all those other nuances that we are not necessarily seeing or not necessarily tied to our trade reports and trade exports. So these are, of course, still need to be fully tightened, and I believe we're well on track, given what we have seen so far in terms of transparency, in terms of more participation. So I would say that yes, we are not there in terms of being appropriately priced in terms of our currency from a fair value standpoint and just looking at the fundamentals of the country, but we have started to see that the things that the CBN governor has put in place so far are largely addressing some of the issues that we believe are the nuances around the FX market, in general.
Despite the economic challenge, the economic climate and all that we've seen, many say there are still opportunities in Nigeria's economy, around our economy, that we should not just look at it, focus mostly on the negatives. What do you make of these opportunities? What sort of opportunities do we have at this time, considering our economic climate and the challenge that we face with the reforms?
Most definitely, with every reform, there's always this side of, should I call it, hardship that comes with it. But it is the ability of the government to actually leverage on whatever reforms in the positives that will translate or trickle down to the entire economy. In fact, one of the issues that they did mention was around addressing poverty and enabling or creating jobs. And this would bring up, this will lead us to the discussion of encouraging more investment across sectors. If we're seeing they are seeing more engagements, more investments rather across sectors, especially the oil and gas, other sectors that could potentially improve our export earnings. I mean, we would definitely see that aside just internal growth that would come about as a result of that investment in those investments in such sectors, we would see that other foreign parties will be more emboldened to come into our country. I mean, if we're speaking about investor confidence and going forward, what we expect or how we see this particular opportunity being tapped into, we would definitely start to talk about things around the rating that was recently upgraded for Nigeria and how has translated, or it was even as a result of the policy reforms that we have seen so far that is, filtering into that rating upgrade. And if we further look at the fact that there are talks ongoing to go back or to be readmitted into the JP government bond index by Nigeria before the end of the year. These are all positives or signals that would encourage, more flows in terms of liquidity. The issues around FX liquidity are already being addressed, and these were some of the issues back then that were mentioned that resulted in the removal of Nigeria from that particular index. So it talks around the country being readmitted is positive for us, and whatever opportunities there are locally, we should look at them in terms of diversification so that we are not necessarily dependent on oil and not so much susceptible to whatever is happening to global crude oil prices. That is also another area that can be focused on. And when we see that infrastructurally speaking, there have been changes, we'll definitely start to see more foreign direct investment flow into the country. And of course, we are all for everything that will be positive for the country eventually. So whatever that has to be done should at least be done. Yes, when we look at the layman's, from layman's point of view, they may not necessarily understand how this will translate to a better job creation. But if we're able to address some of these issues, it should trickle down to even the across the economy and reduce poverty and then bring about economic growth across board.
Always interesting conversation with you, Nabila. But Nabila, let's take it towards this end now. Interventions. We know that Africa has come of age, and we are saying we don't want handouts. Want support aids that will, build inclusive growth. That's what we intend to achieve. The IFC has pledged to support Nigeria. The president has gotten commitments even before now from other countries for support for Nigeria's economy. What sort of interventions are you expecting with those supports that we are getting from these foreign agencies?
So the support that I'm expecting from, the monies that will be or have been committed to be given to the country is largely around projects that would be generate cash flows for not just us, even for not just us, for the entire country as a whole. Now, what do I mean? These monies should be deployed to projects that would bring about economic development, economic expansion, and even encourage investment in those spaces. So we should not just collect money, for instance, and just build a static building. It should rather be something that will generate flows or cash flows for us, because if these monies are coming in forms of loans and not necessarily grants, it will mean at some point we would have to pay it back to the parties that have already pledged these monies to us. So we should be looking to deploy them to projects that will yield cash flows, and when we are done paying the money back, we have something to hold on to that has brought about economic growth, that has created jobs, and of course reduce whatever level of poverty that the country currently faces.
On the banking recapitalization exercise, which of course supposed to stabilize and make our banks very more stable, what do you think with regards to that process? Is it gaining the much needed momentum as expected, in your thoughts?
Most definitely, the recapitalization that started last year has seen a couple of banks completely meet the requirements based on their license type. And when I say a couple of banks, I'm referring to the likes of Access, the likes of Zenith. We still have a couple that would still have to do a second transaction in order to meet up with the requirements before the deadline, which is going to be March 2026. And I would say, yes, we have gained much traction. I mean, engagement based on engagements that we had with the bank management, they've disclosed how successful they were in terms of the capital raise. We've also had the regulator, commend the banks and also caution them in terms of the raising of capital to make sure that these are monies that will not take so much time to be verified and they will be able to deploy the funds to the real sector of the economy. But it's one thing to have the funds to deploy to the real sector of the economy, and it's also another thing for the banks to ensure that they are deploying these funds right. So if there is need to deploy monies to a sector that is highly susceptible to whatever is going on in the economy, it will be difficult for these banks to recoup their funds back. So they have to bring to fore that particular credit monitoring or credit management to make sure that when they are administering this credit, they are administering it right and they are administering it based on the right factors that would earn them something in return. So I believe it has gained traction, not just locally, even internationally, because we have some banks that are looking to channel their second transactions to international investors, and this just bodes well for the entire banking sector. So yes, we are indeed seeing traction on that front.
Before I let you go, many have talked about staying the course of this policy initiatives as instituted by government, that there should be no complacency in any form, going back on all of this, and we need to be firm on it. So in your thoughts, how do we stay the course moving forward? And what is the expected outlook? Of course, projections from Chapel Durham.
So we expect that they will stay the course because in terms of inflation, yes, despite the rebasing, we saw a resurgence of inflationary pressures in the month of March. So we expect that this, alongside the inflation figure or inflation print for April, will determine how the monetary policy authorities would, take their decision when they need to meet. That is on inflation. We have already seen some level of stability on FX, and we have seen improved liquidity, even alluded to by some of the banks that this particular, that the regulator is not necessarily rolling over currency swap, meaning they have enough liquidity in their coffers to even pay back and not have to roll over this particular swaps that they have with the banks. It also speaks to the fact that they would most likely stay that course in order to ensure they do not have anything or are not found wanting in any way. Now, if there are other issues that they need to address with regards to tightening, with regards to policy, taking decisions that would translate to economic growth or encourage investment, are some of the things that we believe we should start to focus on. We like what they've done so far in the oil and gas space. We expect that they will remain transparent in terms of investment in that space, and also look to other areas or other sectors that they can easily diversify from when we look at the likes of mining, the likes of what they can actually do in the agricultural space. And even when we look at the services sector, for instance, another reform which they brought about or which they did was the tariff increase. It's going to support the businesses in that point and on that front. So all these things, I believe, they should stay the course on in order to make sure that they do not go back on what they have achieved so far. And if they would have to be monitoring it, I mean, they have to always go back to the books to see how well they have done in terms of taking this decision or making this particular reform. And if they do that very well, I mean, we should see that we gain traction going forward. What do we expect in-house? In-house, we see that the future, I don't want to say the future is bright, but I mean, we are positive on the reforms so far. We are expectant of better numbers when we look at our GDP numbers post-rebasing, given that it seeks to capture other sectors that were not necessarily captured previously. We are also positive on the things that we've been able to achieve in terms of reining in inflation and also keeping monetary policy, keeping a tight monetary policy, and also that particular synergy that is between the fiscal and monetary policy authorities. We like what they've done there. So we are positive that if things are properly monitored going forward, we should start to reap the benefits of all these reforms so far.
Nabila Mohammed, thank you so much as always. It's really great to start the week with you on Business Nigeria. Nabila Mohammed is an investment analyst. She works with Chapel Hill Denham. Have a profitable week. Thank you so very much.
Thank you. Thank you, Mr.